Hi, I'm Carolyn Ribeiro from mining.com.au. Junior explorer ABX Group is progressing 3 businesses: ionic absorption, clay rare earths, bauxite, and producing hydrogen fluoride from aluminium waste. Company shares have been trading at 10 cents, but one analyst at Corporate Connect has put together an in-depth report on the company and valued shares at 33 cents. I'm joined now by the analyst who prepared the report, Richard Close, and ABX's Managing Director and CEO, Mark Cooksey. Welcome to both of you.
Thank you. Good to be
Hi,
here.
Carolyn.
My first question is for you, Mark. Why did you engage Corporate Connect to prepare a report?
Well, first at the obvious level, it's great to get an independent view of our business and of the value of our business. I guess in particular, as you mentioned, ABX has 3 businesses, and that sometimes did present some challenges in us in explaining to investors what we're doing and how is it valuable. So it was great to get an independent view of that and a way of assessing the overall value of the business. And then in particular, Corporate Connect had an excellent reputation in doing quality work that would be respected by the market.
To you now, Richard. What was your approach to valuing ABX, given that it has 3 businesses?
Look, I took a sum of the parts approach because all 3 projects are entirely different. They're all rooted in bauxite, I guess, originally, but they're all very, very different. What I did with the Deep Leads rare earths project is I looked at other clay-hosted rare earth companies listed mainly here in Australia, but also in Canada, and looked at effectively a multiple of in situ value versus market cap. And so from that, I based a valuation for what is the small but increasing mineral resource at the Deep Leads project in Tasmania. For Alcor, I mean, look, again, entirely different. It's a chemical engineering process, and nothing really exists like that in the Australian market. So what I did there was take what the company's already provided to the Australian stock market, and that was um, the potential to develop a commercial plant down at Bell Bay in Tasmania. I constructed a DCF and a 20-year DCF and looked at that. I think I took a conservative approach too, because I've not included any kind of terminal value in that valuation. And then finally, with the Sunrise Bauxite project, again, I've taken a slightly conservative 1.5 million tonnes per annum project over 10 years. The company indicated originally that they thought about doing that. They wanted to do a 2 million tonne per annum project. So, I've pared it back a little bit and constructed a fairly simple DCF there. And then I've just applied an appropriate risk weighting against each one of those, a probability of success, if you like, and come up with a total value of 33 cents a share.
And you came up with the 33 cents per share. That's 230% on the current price. Tell us about that figure.
Well, potentially unrealized value. And there's a number of reasons I would say. Well, number one, assuming my valuation is correct, and I certainly think that whether the number's 33 cents or not is almost irrelevant. I think there's substantial value in the company yet to be realised. And one thing that really stood out to me when I did the analysis on the company is how little Australian investors know about ABX. I think it probably got sidelined a little bit um, when they were just a pure bauxite explorer, and their aspirations were produce and export bauxite overseas. But of course, then Guinea started producing a lot of bauxite and flooded world markets. So ABX kind of got ignored by the market. And one thing that really, I guess, resounded with me when we went around and saw some institutional investors upon the publication of this report was how little people really knew about clay-hosted rare earth companies, but also there was no knowledge of the Alcor aluminium fluoride technology.
So, Mark, what's your take on the valuation?
Well, I guess the whole point of engaging Corporate Connect and Richard was that they do an independent valuation. So I don't comment or have a view on the valuation itself. What Richard and I talked about was making sure that we had a common understanding of the assumptions and the data used, and I was certainly happy with that. And then it's up to the analysts to say, well, here's what we think it's worth. I mean, clearly, it's not a bad thing to be saying, well, we think it's worth more than the current market price. But the whole point of this was to get an independent person who does this for a living to put a valuation on us that, investors could use to compare us to other prospects on the market.
Now that leads me to the next question for you, Richard. How do you maintain independence given the ABX engaged you to prepare this report and presumably provided some of the data included?
Yeah. Look, it's a question which we get asked often, Carolyn. And the first thing I'd point out is probably the greatest incentive to maintain independence is my name's on the top of it. And, I've had a long and I think pretty successful career in markets, and I'm not going to trash my name just to write a report for money. All of Corporate Connect's analysts have complete power of veto over covering a company, so I get to choose whether or not I initiate on a company, and I liked the look of ABX when I first saw it. The second thing I'd say to independence is all research, no matter who produces it, none of it is done for free. There's always I guess an incentive behind writing that research, whether it be a broker or investment bank doing it to raise commission or generate capital markets business, right through to independent houses.
Now, Richard, you said earlier that in your view, ABX Group is a company that's flying under the radar, and this report is titled Hiding in Plain Sight. These terms are kind of similar. So what do you mean by it?
Oh, look, I think, first of all, I think one of the hardest things when you publish a piece of research is what kind of title you put on the top of it. And most analysts put a lot of thought into what you name a report. But I thought that title was particularly applicable to ABX because, as I sort of touched on before, as a bauxite explorer for a very long time, operating in extremely difficult markets, I think the Australian small cap investment community probably tuned out a little bit from ABX, and in that time they've brought to market the Alcor technology, which I think is just really interesting, an interesting project, I should say, not just from the perspective of producing aluminium fluoride in Australia, where we have to import all of it, but also now that we're looking at businesses which contribute to the circular economy, and Alcor is just such a wonderful example of that. And when we've spoken to institutional investors about Alcor, they've all been very surprised positively about when they become educated about it. The second thing is the ionic clay deposit. There are a lot of companies out there at the moment purporting to have rare earths deposits, clay-hosted rare earth deposits. Our work hopefully has shone a little bit of light on the fact that ABX actually has a true ionic clay deposit, and I think we certainly, when we've gone around to see investors, been surprised by the lack of knowledge in that about those deposits.
And Richard, how did you allow for the risk that projects won't be successful?
Mm-hmm. Look, at the end of the day, it's a subjective opinion. I apply risk weightings, if you like, or particularly in this valuation where we've used a sum of the parts. I've used a probability of success factor, which I hope goes to risking my valuations for those projects appropriately. There's a rule of thumb with exploration companies, basically, before they start, effectively you de-risk the project as you build up a mineral resource estimate. You de-risk it further when you go to an ore reserve. You de-risk it even further, of course, right through to the point where you um, start production. And even then, there's some risk associated with it. So with the ionic clay deposit, the deep leads deposit, that's got the lowest chance of success. Alcor at around about 45%, I think I put in as a probability of success. That really represents the fact that the science has been proven. Mark and his team have proven the science, and now they're moving to a a pilot plant stage. So 45% to me, it might be slightly on the optimistic side, but certainly the science has been proven there. And then a probability of success on the Sunrise Bauxite project really represents the fact that they've had bauxite deposits, a mineral resource in bauxite in Australia for some time. So there's no surprises there. It's really now a process of commercialising it, working out whether or not the bauxite can be shipped to the port of Bundaberg and put on a boat cost effectively.
So, Mark, what's your view on how Richard addressed risk?
Well, again, this was the real value of engaging Richard and Corporate Connect, because I can have my own view of risk, but it's not my specialty, and I don't have the baseline and the experience of comparing it to other prospects on the market. So it's far better for Richard to say, well, he said it himself, here's the rules of thumb, here's what analysts do. I've applied a sort of a framework that I've used before to establish a probability of success for these projects, and it's far better, I think, for him to do that. And I go look back and go, that sounds fine to me. I guess the challenge with risk is you can come up with a whole lot of different numbers that you can justify. So it was better that Richard do it at arm's length from us.
So, Mark, as Richard has pointed out, there's still a lot of work to do. So over the next 6 to 12 months, what does ABX have in store?
Yeah, well, it's funny. It does dovetail quite nicely, because the way we think about advancing projects is what are the biggest risks, and let's prioritize doing the work to address those. So in the case of the rare earths, there's a few. There's how big is the resource, how good is the metallurgy, what's going to be the cost of production, and who's going to buy it, who's going to buy our product. So we're working on all four of those in parallel. So over the next 6 to 12 months, I think we expect to see our resource growing larger, more metallurgy work done, and starting to establish what the cost of production will be, both the capital and the operating costs, and further engagement with potential customers. On Alcor, on the aluminium fluoride, the real key thing is building and then commissioning our pilot plant. So that's the plant. The schedule is that it'll be built by the end of this year and then commissioned early next year. That's the real singular focus. And on the bauxite, it's to continue establishing the project at Binjor in Queensland, and we are planning to be mining and selling small volumes of bauxite from Tasmania this year as well.
Richard, what impact would these achievements have on your valuation?
Oh, look, I think they're all what Mark's spoken about are the real milestones that the company has to meet to get to the valuation I've spoken to. To my mind, the real signposts, if you like, for the Australian stock, for Australian investors looking at ABX, are going to be the establishment of the pilot plant and numbers coming out of the pilot plant, so that they can extrapolate forward, looking to the commercial plant that ABX has proposed sometime in the future. In terms of the Deep Leads Rare Earth project, to my mind, as Mark says, it's really about proving up further mineral resources there. That's going to be, you only have to look at how mineral resource growth has impacted the share price of some other rare earth players in Australia to know that that's going to happen. And then obviously with the bauxite project, which I've not probably put a lot of importance on in this valuation, but with bauxite, getting those tons onto a boat are going to be the key.
Well, thank you both for your time today.
Thank you.
Thanks, Carolyn.